Do you ever think all of this investing is just far too difficult and there must be an easy way of just investing and set and forget? Well, in today's video, we're going to cover the Vanguard Lifestrategy option that you can get on their website that makes things so easy. Welcome back to the channel, and if you're new here, hi, I'm Mark of Desperately Seeking Fi. So we're going to have a look at the Lifestrategy. So where do we find that on the Vanguard? Go into what we offer and then click on the Lifestrategy options. Let's go and have a quick look at what the Lifestrategy actually is. This is one of Vanguard's ready-made portfolios. They also have the retirement options, but we'll just look at Lifestrategy in this video. It helps you stay on track, really simple, and it's a mix of shares and bonds, or equities and bonds, depending on what your risk appetite is like. It's really simple. You could achieve wide diversification between 6,000 and 20,000 shares and bonds all across the world, and it's all in one single portfolio. The whole idea behind the Lifestrategy is to make life easy for everyone. If you choose this, you don't need to worry about anything. Vanguard have already combined multiple individual index funds into this one simple portfolio, and it gives you access to thousands of shares and bonds by just doing one thing. What we see down below is how that works its way through. If you are looking at a low risk, lower reward, short term, you come in at that Lifestrategy 20 on the left hand side, and that is looking at 20% shares, 80% bonds, right up to the Lifestrategy 100, which just looks at longer term investing and is 100% shares with no bonds. And that's higher risk, higher reward. It allows you to decide which one might work best for you by answering 6 very simple questions. So you just hit the get started. It's going to ask you 6 different questions, trying to understand what your attitude to risk is, and then we'll suggest a fund that might work for you. We just hit continue. For all of these, I'm literally just going to go for the strongly disagree to the whole way through. So do I prefer little or no fluctuation? No, let's go for strongly disagree. If it dropped, what would I do? Buy more because the sale's on. If the first 3 months of 2022 everything fell by about 5%, I wish that had been the fact, but we'd buy some more bonds as well. And if it goes down, what do we want to do? If the market goes down, would I generally sell all of the riskier things and start buying safer? No. And do I just go on a whim, listen to somebody on YouTube going, this is the next thing that's going to 10x and go to the moon? No, I do my own due diligence, and so I will strongly disagree on that. And if there's potential, so this is all to do with your hypothetical funds and your risk to reward ratio and risk appetite. So I'm going to say I will go for Fund C, where there is a greater potential reward, but also on the other side more of a risk. And what's that going to tell me? I think it's going to tell me go for Lifestrategy 100. Hardly a surprise there. Let's have a quick look at Lifestrategy 80 equity fund and see what this is like. So with this, it is slightly different. You can go either accumulating or income. What you do not need to do is buy a single whole share, because this is an equity fund, so you can buy fractional parts into the Lifestrategy 80. That means you can choose whether you want to just accumulate or have a dividend being paid out as a ongoing benefit from this fund, but it would cost you $247.39 to buy a full share in this. You are obviously 80% equity, 20% bond, given away by the name. Ongoing charge, actually not too bad at 0.22%, and actually a lower SRRI score than many of the ETFs on the platform. The objective of this is to hold investments that will pay out money and increase the value of the portfolio, by comprising approximately 80-20 in shares to bonds. It's been around for about 12 years. It has 8.1 billion in assets. On the performance, we see that there is a bit of oscillation here on the Lifestrategy 80. It is quite volatile, but that is part of the risk to reward that we're looking at. Over the past 18 months, we are slightly down from 257 down to 247, so about 10 pounds difference per share. What's it looking like over the rolling years? It has done reasonably well, and let's see what that is like over a cumulative period of time. If we're just looking in the short term, it is down about 0.5%. Year to date, it's up about 3.3%. Last year wasn't particularly great, but if we look at how it has performed over the 3, 5 and 10 year, it has returned pretty well. And since inception, it's looking at 150% up, looking at about a 12.5% per annum over that time period of the 12 years. What we can see is lots of different trusts and funds, and quite a few of them will be quite well known to many of us. We have S&P 500 accumulating version, so not VUS, which would just be the dividend. We have a number of different government bond indexes, gilts, and other developed Europe and emerging markets in here. And emerging markets actually hits a reasonable allocation. Looking at about 10 different funds making up about 46 billion and earnings on growth rate of 11% and turnover rate of about 6.3% as at the end of February. On the bond side of things, 4 different bonds actually held within the Lifestrategy 80. We've gone for the accumulation side of things here and looking at what was the yield at the close of February. It was 1.56 gross. Let's see what it was like if we did income. So on the income side of things, slightly higher than the accumulating. What is this going to cost you? As we said at the very outset, 0.22% for the ongoing charge on this Lifestrategy. What are my thoughts? As we saw earlier, there are the 5 different variants and it all depends on your risk appetite. I have the Lifestrategy 80 in an old ISA, and I've just left that there to continue working away, and it's sort of one of my higher holdings within that ISA. I'm looking at just holding that for the long term. I did think of selling out of it when the big rally was taking place last month, but I decided actually it still gives me that access to 20% bonds, so I decided just to hold on to that. Why don't you have a quick look at this video that looks at different dividend ETFs that you could potentially hold on the Vanguard platform. Thanks very much for watching, and I'll see you in the next one. Cheers, bye.